My guest today, Andrew Romans, co-founder and general partner of Rubicon Venture Capital, an early-stage VC fund with offices in San Francisco and New York City. Andrew has raised millions of dollars from VCs and corporations. Andrew also advises corporates on corporate venture capital, also known as CVC programs. Andrew is author of a book, The Entrepreneurial Bible to Venture Capital: Inside Secrets from the Leaders in the Startup Game. And recently, Andrew authored a book on Masters of Corporate Venture Capital. Andrew, welcome to the show.
Sanjeev, thank you for having me.
So Andrew, this book, while writing this book, you had interviewed at least 100 CFOs, lawyers, and then venture capitalists, CVC. Tell us about your experience, what you have learned while writing this book.
Sure. So of the 100 plus interviews, it was mostly with CVCs. So that means Intel Capital, Microsoft Ventures, large companies that do kind of venture capital investing. I think that the big thing I learned is that really, I think pretty much every single large company should have some kind of venture capital program. It's widely agreed here in Silicon Valley that software will eat the world, or software and technology will literally go after every single industry. There's not a single industry that's not going to see artificial intelligence and automation and just technology change things. So if we all agree that every single big industry is ripe for disruption and is going to be invaded and attacked with software and technology, then they should be aware of what these changes are, and they should be winners of the change, not losers. And so I think it makes a lot of sense that if they have some kind of R&D budget or IT budget or profit on their sales, they should probably allocate something every year to getting into this asset class, to get the information before it's too late to respond. And there's a million reasons why they should do it. In chapter 1, I just wrote the list. I asked every CVC I met, every corporate venture capitalist, why do you do it? A common answer is they use it to drive M&A. Without it, they don't even know what to buy. And then there's offense and defensive reasons. You could say it's to grow revenue, lower expenses, diversify the products and services, and ultimately at a country level, you start talking about transforming an economy. We can get into that later if you want.
So how does this CVC program work? So let's say I am a person working at Intel, okay, and then you come to me, okay, educate me about CVC programs. I mean, probably Intel didn't already know about it, but what's there for Intel to enroll into this CVC kind of programs? I understand that at the end of the day, if they put their money right now in R&D, they may get something out of this, let's say 20 years or maybe 100 years from now. I mean, so that's what you are saying. I mean, you are going as far as 100 years, right? Somewhere you have written somewhere.
Well, I think when China is famous for the 5-year plans, or centrally planned economies like the Soviet Union, talking 5-year plans, and I say this is a 5-year, 10-year, 50-year, 100-year plan that the Chinese should stick to, and probably everybody else should. I think that there's a lot of ways to make mistakes here. One crazy statistic is that the average lifespan of a new corporate venture fund, like Microsoft announces Microsoft Ventures, statistically in about 3 years, it's closed. So it only lasts for 3 years. Intel Capital is the longest because a junior co-founder of Intel itself, Les, is the guy who started and ran Intel Capital for so long. So he had the power, to do it. I think to avoid mistakes and being a victim and a statistic of you announce it with some big party in San Francisco or Silicon Valley, and then a few years later it's totally dead, is start by deciding what your budget is, some percentage of your R&D perhaps, or your IT budget, or your profit, and then invest in maybe 40 or 50 actual VC funds that are actively doing it. But only invest in those VCs if they're going to share information with you real time. Without the information, it's pointless. If you're a $33 billion a year company, making a 10x or 20x return on $20 million is not going to move the needle. If it helps you acquire a company that has reoccurring multi-billion-dollar revenue stream, that does move the needle.
Yeah.
So I'd say step one, invest in other VC funds. Step two, have those VCs bring partnership opportunities with the startups. And if you're going to be reselling and distributing or becoming a customer, or you're going to meaningfully lift the revenue of that one startup, Gordon Gekko would call that a buy signal in the movie Wall Street.
Yeah.
If you know the revenues are going to go up, maybe you should buy some stock in that. And so they can cherry pick and invest in the best ones that have really strategic fit with the corporation.
Okay. So I want to shift our discussion on China. You just now gave an example of China. So you might be knowing that in China, in year 2015, they have invested at least 70 or $77 billion just as an investing company. I'm not talking about a real estate investment, just strictly investment, capital investment, or venture investment in USA. And there are some members of Congress, members of government in USA. They have negative sentiment about this. It's not only investing, but some of the Chinese companies, they are buying USA assets. What are your views on Chinese company investing in startups and buying corporations or properties or assets of US companies?
Yeah. Well, I think that with the way the Chinese government and businesses are run, with the China Development Bank providing capital for Chinese companies to sell to Western customers that can pay later for what was made in China, they've brought money into the current account of the country. If you measure who's the biggest economy by bank balance, those companies are sitting on a lot of euros, dollars, Swedish kroner, all of that, right? So they've got money, and their entire economy is at risk of losing the low-cost labor arbitrage and that going to India and Vietnam. And so they're actually very quickly investing in technologies to create automation of those factories. All the peasants that move to the cities that work in the factories are going to lose their jobs because it'll be all drones and machines running in those factories. Trump saying, let's go bring iPhones back to the United States is the wrong answer. It's actually an extremely foolish thing to say in public.
I was going to ask you the same thing. That was my next question, that what's the impact of Trump now that he has White House, now that he's going to be a president of the United States? What's impact on venture capitalists when you look at the entire ecosystem, global system, venture capitalist investment, and then come back to on Silicon Valley venture capital investment? What's going to happen?
Okay, and I can give you an honest answer to your question of are these senators right to say don't let the Chinese invest in my VC fund or buy startups or invest in startups? I think that so let's see, which one do we want to take first out of those questions? I'm sorry.
I would say let's just talk about global. Just give me the scenario of what's going to happen, because there are many startup founders. When I talk with them, they are nervous that would they get funding? How the Trump, because they may want to acquire funding from the Chinese investment firm.
Right.
And Chinese investment firm, I'm not talking about big firm, but there are some small or mid-sized investment firms. They may not be feeling that they are not welcome here to invest anymore. So how do you? Well, so what's the solution here? I mean, is this something Trump in? All the Chinese investment stops? Is that, what are your views?
Okay, so first of all, I think that even if Trump starts a massive trade war with the Chinese and offends and upsets everybody, the kids are going to be just fine. We're going to continue to raise money from the same places we get it: Harvard Endowment, Pension Fund of the State of Oregon, Swiss Family Office, other wealthy people from around the whole globe, the Middle East, the Gulf, even out of Turkey. Okay, so we'll be just fine without the Chinese money. That said, it is, if you look globally, who's got the biggest bank balance right now? The Chinese have the capital, and we've got the startups. They want the innovation, and we have it. So from our perspective, we're more international thinkers, as like it's one world, one country almost. And we would like to allow Chinese to invest substantial percentages of our VC funds. And after we invest in our startups, we want to introduce them to our friends in China that can help them make technology or sell into the China market. To stop us from dancing with each other and getting married and doing business together with the Chinese will hurt our business. But like I said before, the kids will be just fine, and we can continue to work with Japanese investors and other investors that I suppose this so-called senator will allow us to work with.
Tell us about your views on H1B visa. You recently wrote a blog on H1B visa. Much can be said on both sides. H1B visa, one argument is that U.S. workers losing job against the H1B holders who are taking away their job because you can give them low salary and they can take away U.S. job. And then other side, company like Microsoft, Facebook, what they're arguing, we need H1B visa because we don't have enough talent in Silicon Valley. I'm just giving you an example of Silicon Valley. So how do you balance this? Because Trump now is saying H1B visa, they're going to curtail that visa, number of visa to H1B holders.
So if I were the teacher in a class and Trump was a student, he got the answer wrong on bring the factory back. The right answer is invest in technology to automate these factories, and transform the economy. So he's wrong about that. Another thing that a lot of people are wrong about is they think that if one of my startups gets funding from my VC fund, and they go to hire people, and it's a talent war, and they hire a software engineer, like some big data specialist, who's from an IIT from India, that Trump thinks that we just removed a job from some unemployed person. It's actually the opposite. So this is what I want these politicians to understand. The correct answer is give one H1B visa job to a non-American, and you've created possibly 1,000 jobs for Americans. So if you allow Uber to have speed to execute their strategy and quickly get that software working so that the cab picks you up where you're standing, not around the corner, and we needed an Indian-born entrepreneur or engineer to do the job, it'll create thousands of jobs in the state of Texas for people to join the gig economy and ride a little Uber and make some money while getting educated or whatever they do. So the giving of the H-1B job to a non-American creates jobs for Americans.
Yeah, I mean,
no doubt about it.
Yeah, this could be a long, elaborated discussion, no doubt about it. So what do you give advice, since you had worked with many founders, investors? What are your, if I come to you, Andrew, I want to start a company, I have a great idea. I don't have prototype, but I have great idea in my mind. And if you give me 1 month, if you give me money, seed money or angel money, I'll just give you the prototype and I'll make it happen. What's your advice to founders? I mean, where do you put your money? I mean, a founder who has great idea, or you look into what are your criteria in investing a company?
Okay, so
and founder mainly.
So it's really a question of what stage do we invest, and what advice to give to someone who's at that pre-seed idea stage, it sounds like. Our fund invests in roughly 25 companies out of a fund. That's probably a 2.5-year period to get into. We invest and buy stock in 25 different companies. With the first time we put money in, the first bite into that startup, it's typically at a late stage seed. And the VC funds got much bigger in size in reaction to the 2001 and 2008 economic downturns. Strangely enough, the funds got like 10 times bigger. As a result, the Series A has become a $10 million financing. So most VCs don't come to you when you're pre-minimal viable product and you're pre-revenue. They come into you when you're growth. We're positioned right before that. So what you were talking about is too early for us. Okay.
So Andrew, I'm afraid we are running out of time. Thank you very much for coming down to our show. And don't forget, Masters of Venture Capital.
Okay, Sanjeev, thank you very much.
Thank you very much.
Great to see you.
Take care.